Every time.
Check, 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 check. Microphone check. All right. Now, back to what I was saying. Good evening, everybody. How y'all doing? Hopefully, y'all doing well. Uh, hmm. Good thing I was paying attention. Well, I ain't gonna say paying attention, but I was tapped in because, man, I'd have been going a long time without having any sound. Now that we got this together. All right, man. Good evening, everybody. I see we got Yolanda in here. I see we got Head Learn and Share in here. Got Kim, got Will. Oh, we got Felicia. Uh, you tried to tell me. I see you tried to tell me. I appreciate that. But I can't hear the chat. Like I can't hear the chat. And if I don't see the chat, then what? How long will we go without hearing the word? Hey man, y'all do me a favor. Hit the like button. The algorithm, they seem to like when y'all hit the like button. They seem to like when y'all share. It shows it to other people when y'all hit the like button. Y'all, you know what I'm saying? Y'all press the like button. They show it to other people. Other people get a chance to experience what you experiencing right now. Right? So hit the like button. Let's try to help as many people as possible. How y'all doing today? How y'all doing, man? Let me do my due diligence and share this right here. All right. Me madre, me mama. She be like, hey, she put your disclaimer out there, child. Like, mama, you're right, mama. That's my disclaimer. My disclaimer is out there, right? All right. My disclaimer is out there. Remember that articles and content on this channel, on this channel right here, what you're looking at, is it's for entertainment purposes only and do not constitute investment recommendations or advice. You know why? Because I'm not a fiduciary or a financial advisor. Investment, it involves considerable risk. You should always consult a financial advisor or fiduciary before making any investment decisions. The disclaimer is out there. Now, does this stuff work? Yes, it does. How do I know it works? Because I use it myself. I use it myself. This stuff works. Can it change your life? Yes, it can change your life. What can change your life? Understanding how to read price action, right? That's why we get together and we recap. We recap. See what it say right over there? We recap the intraday price action. Why do we do this? Because if you understand how to read price action, if you understand order flow and price delivery, you have learned, you have gained, you now possess a skill and no one can take from you. And you can go and pluck money off of that tree that resides in the market at any time that you wish. And no one can take that skill away from you. So you have the power to generate your own income without the need of a boss, without the need of punching a time clock. You now can gain back your financial freedom. You now can take control of your financial destiny. You now do not have to ask permission or ask for a quarterly, semi-annual, or annual raise. You can decide when you want to make more or make less. You can decide all of this just by possessing this skill. Trust me, it's not a farce. It is not a lie. I lie not to you. Now, speaking of price action, the price do anything today. Allow me to share the Zoom link in the chat. All right. What's up, Kashaya? Kashaya, I ain't seen you in a month of Sundays. Bob's your uncle. How you doing there, Kashaya? I ain't seen you in a month of Sundays. I pinned the link to the top of the chat. All right. Kashaya, where you been at? I know you ain't in uni. Kashaya, you ain't in uni no more. Where you been at? Where you been, Kashaya? We miss you. What's going on, Sarah? How you doing, Sarah? Sarah, if I am, what's up, Rhonda Green? If I ain't mistaken, I think Sarah, that's my family member from over in Tremaine's world. Over there in Tremaine's world. I've been watching, just not typing as much. Too much work. Y'all like my Kashaya voice? I've been watching. I'll also be back in uni soon. For those who don't know what uni is what people outside of the US um, call college. People outside the US call college uni. I don't be me troll. Hey, gang. Sarah said I'd be trolling. Do I troll? Gang. I'm not a troll. Am I a troll? Who stop spreading these falsifications about me? Am I a troll? Gang, 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 gang. If I'm a troll, drop a one in the chat. If I'm not a troll, put a two in the chat. I'm not a stop spreading these falsifications about me. Spread these falsification, these untruths about me. Hola, Valentine. Oh, uh, you did not witness anything. Fake news. Fake news. That's fake news. That's how our president say fake news. You fake news. No, 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 fake news. No, I'm not talking to you, and I'm not talking to you, Sarah. Fake news. Hola, Valentine. Hola, Valentine. Hola, my friend. Fake news, Sarah. Fake news. Hey, uh, I forgot to pose my question. How to be a better man? Um, Depasu, Depasu Kumar. Um, I don't have that answer for you. I can't tell another man how to be a better man. If you got a question about the price action, I can help you there. But if you want somebody to help you be a better man, like the Breakfast Club, I don't know if they got the Breakfast Club where you at, but if you call the Breakfast Club hotline during a certain time, they got this segment called Just Fix My Mess. And she help people fix their mess. She's not a professional, but she's seen a lot of stuff. So if you want, I can't tell you how to be a better man. But if you call the Breakfast Club, you know what I'm saying? I think it's like 1-866. What's the Breakfast Club number? I am 17 and I try working hard and I'm trying learning all this stuff, yet I feel underappreciated, sir. Okay, if you're 17, right? I got an 18-year-old son, I got a 15-year-old son, right? If you're 17, right? Are you still in school? Are you still in school? I got a feeling there's somebody trolling me right now, but I'm gonna entertain it. Are you still in school? Yes, you're still in school. Okay. So if you're 17, you're still in school, just focus on school right now. You know what I'm saying? Focus on being young. Don't try to focus on being a man. Focus on being young. Focus on, what I'm saying, school right now. And grown-up stuff gonna come, man. Don't be thinking about grown up stuff when you're 17, man. Grown up stuff gonna come. Focus on, what I'm saying? Focus on being a great student. Focus on being a good kid. Focus on, hanging out with your homeboys. Focus on going out on dates with females. You know what I'm saying? Focus on kid stuff, man. Grown up stuff gonna come. Yeah, man. All right. You know what I'm saying? You know what I'm saying? These are the things that change boys to men. It's gonna come. It's gonna come. One day you gonna wake up and I have a tip for you for being a good father. Please listen to your children and try to understand their problems. There's a lot of problems coming up, and while support them. I appreciate that, man. I appreciate that. Me and my boys are close. You know what I'm saying? I got good kids. I talk to them, I listen to them, they listen to me. You know what I'm saying? We reciprocate respect, and you know what I'm saying? It's a beautiful thing. A beautiful thing. Appreciate the tip. You know what I'm saying? You already sound like a wise young man. You know what I'm saying? Keep it up, man. Keep it up. Did Price do anything today that surprised somebody? Did Price do something today that surprised you? When you were watching the charts today, did Price do something that caught you off guard? Right? Did Price do something that caught you off guard? Mhm. Right. And I'm going and I'll be totally transparent with you right now. Right. Price didn't catch me off guard, but I was bullish for the day. And Price was not. So Price did something that I didn't expect. Right. I shared a screenshot in the gang where I took a trade. Right. I took a trade. It went just beyond my profit target. Right. Because I wanted it to go a lot further. So what I did, right, I was trading the ES, and when it went 11 points, I wanted at least 10 points. When it went, I set my ATM so that when it goes 11 points to my mama FaceTiming me. Y'all hold on. Look, see what mama want, and tell them live. If I need to get on, then tell me I need to get on. Right. Where was I? What was I saying? What was I saying? I forgot what I was saying.
I think he said it went to 11 points and you set your ATM to
That's what I
do
was saying.
something.
Appreciate that, Jim. I set my ATM so that when I wanted 10 points. So I set my ATM so that when it hit 11 points, lock in 10. Right. Um, and so it went 11 points, it locked in 10, and it stopped me out. Um, it stopped me out for 10 points, right? Because I was buying, because I was bullish. You know what I'm saying? The overall time frame is bullish. Um, we're in a strong buy program. Nothing, you know what I'm saying? Price is refusing to trade back down to any of the PD arrays that we're looking to use as support. We're just pushing through them and keep going. So I'm like, you know, all right, today's probably going to be more of the same. So when it starts showing me an unwillingness to continue lower, right, I'm going to buy it. And it showed me an unwillingness to go lower, and I bought. But since I, let's just say, I had a feeling that price may want to play stupid, right? Because we've been in very high resistance conditions, right? It's been high resistance up, high resistance down. No matter what it's doing throughout the day, it's been high resistance. So I'm like, I'm going to play safe. Base hits, base, not looking to be a slugger. I'm not trying to be a Louisville slugger, right? And so when I came back and looked at the chart later, you know, in hindsight, I can clearly see that the day was a bearish day. I could clearly see it. It was a bearish day when I look at it in hindsight. But in the moment of watching price, right, everything in me felt and wanted to buy because it was giving me signatures of I'm not trying to just sell off. I'm 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 busting the head of any short sellers. If you're out here in your Elon Musk shorts, you're getting your head bust, right? So if you're out here trying to short Tesla, you're getting your head bust. Who remember back in the day when everybody wanted to short Tesla? They shortened Tesla because Tesla up at about $3,000. They shortened. And Elon Musk is just busting their head. It will not come down. Who remember when everybody was trying to short oil? They was trying to short energy back in I think it was 2021. It was late 2020, 2021. They trying to short energy, get in their head, bust. Everybody want to short. We got to short this energy, short this oil. You could not stop it. You could not stop it. All right. So that's what the market been doing. You ain't been able to stop this uptrend. You ain't been able to stop this buy program. And it was giving me signatures. Hey, it's okay to buy. But because the conditions that we've been in, and I'm locking in a base hit, right? If it would have kept running, let's just say it stopped me out, which it did. It stopped me out. It went all the way to the target that I was looking to. Matter of fact, let me just go to the charts. Yes. All right. This right here, the high of this fair value gap right here, right? That was the target right there. The high of that fair value gap right there. See where we got that Fibonacci there on that 15-minute Bessie, that Fibonacci there on that 15-minute Bessie, right? That was the target right up there. All right. If I go down here, I don't know if I still got this stuff in my chart. I do. It's still on my chart right there. That was my target right there. Right there. See that? That was my target right there. Why was that my target? Right? Because these are the Bessies that I was watching earlier today with the gang, right? And we had buy side liquidity resting right here, right there. Okay. Now, Tim, why was the high of this your target and not the buy side liquidity? Two reasons, right? Two reasons. Right? Two reasons why that's not my target. One, because we got a 15-minute fair value gap here, 15-minute fair value gap there, and I went into the trade down here, all the way down here, with the idea that once we get up here, right, I want price to utilize the close proximity or near, whatever Michael called it, when you got 15-minute fair value gaps in close proximity to each other. I want to see price work from this fair value gap to that fair value gap. And as you see, right, in hindsight, you can see that's exactly what the algorithm did, right? Once we got above this fair value gap here, we used that fair value gap to push up to this fair value gap. Consequent encroachment came back down to the low of it, pushed back up to the lower quadrant, pushed back down to the upper quadrant of that one, pushed back up to the high of it, right? And then turned around, right? Then turned around. So price actually did what I wanted it to do, but how did it do it, right? I got a very early entry, right? Got a very early entry, okay? This right here was the 10 points there. That was the 10 points, right? I set my ATM strategy. Once it goes to 11 points, lock in 10, right? What made me set my ATM strategy to that, right? Because I know it's easy to hear people say, oh, I did this, I did that, I did that. Now, I'm giving you the why behind it, right? So if we come here from the high of the fair value gap using the volume imbalance there, right? And we stretch up this tool right here, right? Right there, right? You see where 11 points land, right? You see where 11 points land? 11 points puts me right at the previous day's high, right? It puts me right at the previous day's high. Now, what do we know about the four pillars of price, right? The open, the high, the low, and close. What do we know about those, right? What does the algorithm use to open, high, low, and close for? What does it use it for? It uses it. These are the pillars that the algorithm use, right, to make all of its decisions. Right? It uses these three pillars to make all of its decisions. Right? Now, looking at price here, right? Looking at price here on what we've done for the day, right? And let me squanch it up and explain to you, right? You say, well, Tim, why, if you were bullish, why, and you say when you look back throughout the day, it was clearly bearish, what was going on, right? So this is when I got in. So let's look at the chart prior to little Timmy Rogers taking a trade. Right? Prior to me taking a trade. Okay, let's go back a little bit more. We'll come all the way over to here. All right, so now let's squanch it up. Now for the gang, right? When we were watching price this morning, right? I don't know, y'all, whoever was on here, right? We were talking about this low here, and then if we lose the low, right, then I would start looking down because we had midnight open down here. Then we had, liquidity over there. You know what I'm saying? We had draws down in this direction down there. We got draws on liquidity down there. Okay. So yeah, that in mind. Now, looking at what price was doing, right? We were in a very strong buy program, right? Unwilling to drop. Okay, we came here, right? We came back down to the discount of there, right? We expanded up. We came in this area, right? Without coming into like a full discount from here, right? We traded back down here. Then we traded up, and then we dropped back down into a discount of here, right? So all of this is very efficiently delivered. We dropped back down into a deep discount there. All of this is very efficiently delivered, right? We're in a discount of here, very efficiently delivered, went into a holding pattern, right? Came up, dropped down there, took out that low right there, right? So all of this is efficiently delivered because see, we came down, discount, trade away, take out that low there, but don't take out that. You say, Tim, I can't see all that. Don't worry about it. You don't need to see all of that, right? You got to see every candle, right? Okay. And then we blast off. Boom. Right. We blast off. We come back down here. Boom. Into a discount of the move. Mind you, now I'm totally ignoring this wick right here. That's some weird. Somebody said they saw something that the president tweeted or said, right? That's some weird wick at a weird time. I'm ignoring that, right? So we come here and we come back down to a deep discount there, and then we push back up again here. So now when we come here, I'm watching these two PD rays to look at how they support price. Okay. I'm looking at how they support price, and I'm allowing for price to come down here if it wants to and sweep some liquidity, right? But if we lose this area, meaning we we start to displace through it, then I'm looking toward midnight. Then I'm looking toward this low over here, right? I'm looking for deeper liquidity. All right. Now, but that's why I'm bullish. We're in a strong buy program. So I'm bullish, right? But I'm not trying to force anything, right? I'm not trying to because once we lose this, I'm not trying to force longs once we lose this. Why not? Why am I not trying to force longs once we lose this right here? Right? Because we got liquidity here. Okay. So whenever you lose your support via PD arrays, right? You want to allow for price to go to some liquidity before looking for opportunity to continue long or short, right? So here we come here, right? And we get down below here. We hit a prior day's high, the previous day's high, use it as support, and we push back up, right? Above these, I don't know if they formed yet. They probably are formed, but we push back up here, right? And then we come back down, and then we lose this one, right? Then once we lose that one, then we come back down, right? And we start to lose this one, okay? And then once we get down this sell below this sell side, right, we trade back up, right? So still fighting there. We've swept some internal liquidity, but then we come back and we lose this one, right? So now we lose this one. Now we've lost this as support. So now that we've lost that support, now we're looking to use it as resistance, right? And since I'm bullish, right, I'm looking for reasons to buy. Okay. Look for reasons to buy and a discount. Okay. So now here, now I'm anticipating price. We've already engaged sell side there, right? Right. We've taken out this sell side. Where's the next liquidity? Down here. Right. So when price trades through this low here, I'm not trying to get long here, right? Because this low was unable to push us back up, right? This low took us there, and then we immediately came back down and lost this, and we never really fully regained it as support, right? Now let me zoom out a little bit and show you exactly what I mean there. All right. When we came down here and took this low right there, right? We came here and took this low. We came down, took the low, then we pushed back up, right? Taking out that high, and we never regained this as support. We immediately traded back down through it and closed below it, right? So what do we call it when we go in the direction that we're when we go in the direction of, let's just say, taking out liquidity in one direction, right? Immediately turn around and sweep the opposing liquidity and then reverse, right? That's the wig snatcher, right? That's the wig snatcher there, okay? Now, the wig snatcher ain't confirmed until we break through that low right there. But in the sense of we have taken liquidity and we get back above a PD array that we were using for support, and we're looking like we're losing it. We've already lost this one. We're looking like we're losing it, right? And then we immediately trade back through it. That right there is your sign that that sweep of liquidity is not taking us up. Okay. And when we look there, we can see that we came in and swept this internal liquidity, and it didn't take us up. So now you're looking at deeper liquidity. right? You're looking at deeper liquidity. And then when you zoom out more and look, this low, right, is internal liquidity for this entire range right here, right? This is the last impulse leg, if you will, right? Outside this area here, but this is the last impulse leg, if you will, from this entire range here. This is yesterday's full range, right? So that's the low of the dealing range. That's the high of the dealing range. That's yesterday's full range, right? That's the lowest low. We swept liquidity. Liquidity pulled down here, right? And now this is the highest high, right? And that right there is the last portion of that dealing range, right? So inside this right here, that low right there is internal liquidity for this here. So when we took that and it didn't push us back up, right? That's the next level of liquidity right there. Okay. So, but I'm bullish, so I'm not trying to short anything, right? Because I'm bullish and we're in a buy program. All right. So now let's put the meat back on the bone. Right now, that's where we were in price. That's why I was bullish, right? And then we come, you see here, once we come to that sell side right there, all right, we come to that sell side right there. My phone going crazy. We come to that sell side right there. Look what we do. We come down, right? Struggle to take it, push back up, come down, get below it, and reject off of it. Boom. We reject off of it right there. So now, right, we reject off of it. Now I'm chomping at the bit. Right? I'm chomping at the bit now. Right? So we reject off of it. We create a BISI right there. And we create a change in the state delivery right there. Right? So I'm chomping at the bit now. I get long here. And I look at, while I'm looking at all of this workout, I plan it out. Boom. Right? There's where I want to enter. Right? Up there is like 11 points away. I want at least 10 on the ES, right? That I can get 10 out of it. If I get here at this level of resistance and price wants to turn around and come back down, I can get at least 10 points out of it, right? I can get at least 10 points out of it. I want this up here, this high there. Why? Because this is the area that I was looking at for support. And now that we're below it, right, I'm anticipating it to be resistance, right? And if we get up into this one here, right, we get up into this one there, when you look there, where is the liquidity as we're coming down here, right? That right there is just internal liquidity. That doesn't complete anything, right? That right there is internal liquidity. That doesn't complete anything. This right here, on the other hand, right? This is a level of liquidity right here that could complete a market maker model, right? That can complete a market maker model because you have an area of consolidation and then you have a return to that consolidation, right? That's a signature of a market maker model. Consolidation, right? With offset distribution, we consolidate, trade into the buy side, drop down, and then we have a return to consolidation right there. Looking at someone would get tripped up by this bullish breaking market structure right there, right? But like I said, we went back up there, right? We got a bullish breaking market structure, but we immediately traded back below that fair value gap there, right? So that right there would get you a bust head based off of a 2022 model, right? Take liquidity, breaking market structure, trade back down, get long on the fair value gap, right? Get your head bust. Okay. So we got to return to consolidation, and then we come down, take liquidity, and then we get a smart money reversal. Right. So that's why I was looking for this high as the final target that I really would take. Right. Final target that I really would take. But when we got here to this area of resistance, this previous day's high, right, we got a deeper retracement. Okay, we got a deeper retracement. Now, if I would have, let's just say, because once we cleared this high right there, right, I manually moved my stop below this down close candle to cover contract costs, right? Because we got a lot going on with, I ain't trying to stay in positions long, right? If I would have just left it there and not automated my stop to come there, yes, I could have got to where I wanted to go. If was a fifth, we'd all be drunk. But, right, I wanted at least 10 points. I got my 10 points. And in hindsight, I could see that it delivered. But also in hindsight, I can see that the day was truly bearish. It was a bearish day starting at the New York session, right? It's looking at it in hindsight, like this afternoon when I came back and like peeked at the chart this afternoon, I was like, oh man, I was trying to get long, and what I'm saying, the day was clearly bullish, right? The day was because I came in here about 2:45 or so, somewhere around here, right? And I could see that the day was clearly bullish. It's like clear as day when you look at the price in hindsight. Just squanch up the chart like this right here, right? You will see that we reached our higher time frame destination, right? When we get to a higher time frame anticipatory reactionary point, right? We kind of chill and sit on our hands anyway because we've reached a higher time frame anticipatory reactionary point, right? Once we got there, right, it's going to take a lot for it to just continue blasting through there, right? Especially when you reached it during today's session. Today's kill zone pushed us up into our higher time frame target, right? I spoke about that with the gang. I said my target got hit without me. My target was a prior week's high right here at the low of this SIBI, this daily SIBI, right? Prior week's high. Do I still got it on my chart somewhere? It was a prior week's high. Was it on the NQ? Might have been on the NQ. I don't know which one I had it on. It was on the NQ right there. Right there. Prior week's high right there on the daily SIBI right there. It was on the NQ. That was my target. Right. And right here on the news candle, we hit it. We hit my target without me. Right. So even look on the NQ. We hit the target. Right. We traded down. Right. Got a bearish breaking market structure right there. Right. Target hit, bearish breaking market structure, retrace back up into a premium at that same target again, right? But when do we hit it? We hit it after 9:30, right? So given the 9:30 traders an opportunity to get short above that old high, right? Because this opportunity there was afforded pre-market, right? So after 9:30, afforded opportunity to get short, right? And then we come down, right? Take out the sell side with the intention of going lower, right? As I'm watching here, I'm trying to get back to here on a long, right? But realistically, if you are truly, truly bullish, right, what would you be targeting? The liquidity, right? But me, since I know we're in high resistance, I'm just trying to go back to a prior level of resistance, right? But looking at it in hindsight, I can see that all we did was take out the sell side with the intentions of going lower, trade back to a premium, right? And then come down lower to where the sell side that we had marked out from the beginning. When we said what? If we lose this low, right? I think it was this low. Whatever. If we lose this low, we got midnight. We got this sell side there because I'm ignoring this wick. And then we got this sell side here. All right. And look at there. When we lose the low, where do we go? Midnight, that liquidity, right? Even came down to this liquidity over here. Okay. So, although I was bullish, we had already talked about if we lose this low, where can price possibly go? Right. And this right here shows that, yes, you can be wrong, right? Make money if you don't overstay your welcome, right? Because even here on the NQ, we came back up right there to that, close to that daily prior day's high, pulled back, didn't pull back as deep, right? Traded up, then dropped down, right? Didn't pull back as deep, but traded up, dropped down. Wasn't the same setup as the ES, right? It wasn't the same setup as the ES, wasn't as clean as the ES was. And the reason why I say that is when we wick below there, right? Came up here, it wasn't the same, it was similar, but it wasn't the same setup because this one here, it did not trade back down into the fair value gap on the ES, right? When you look at it on the ES here, right? It was a lot cleaner on the ES, right? We came back down into the fair value gap that was created, right? But on the NQ, it didn't come back to the fair value gap and it went up, paused at the prior day's high, retraced back, right? Went up, paused at the prior day's high, a deeper retracement back, right? Then continued up and then dropped. Okay. But looking at price, you can see that it was clearly bearish on the day, right? Clearly bearish on the day. So you can get the intraday bias completely wrong and still make money. Or you can get the intraday bias completely wrong and get slaughtered, right? But trying to force more extended moves than the algorithm is willing to give you, right? So that's why I always tell people don't get caught up in the fact that you see Michael and other traders taking these entries and taking them for 3, 4, 500 point runs, right? It's not gonna happen every day for you, right? Understand the conditions that you're trading in. Take your small gains, right? Admit when you're wrong, right? Document it if you need. I'll be honest with you. I don't really journal like I used to. I don't journal like I used to. Matter of fact, the only time I journal now is when I'm journaling with the gang. Why? Lazy. Lazy. I'm lazy, right? I'm a visual learner, right? And when I'm journaling and having to go back and look through all those journal entries, that don't work for me, right? It'd be hard for me to find notes inside my notepad right here. It'd be hard for me to find notes in here because I can't remember. I go through, I date it, I be dating it and stuff like it. I can't really remember where I wrote it down. And I spend so much time looking through trying and I get frustrated. I'm like, forget it. And then I can't remember what I save it as when I save it at, like, I'll be like, oh, I'm gonna give it this name so I can remember. and I can't remember what I saved it as. So I just get frustrated, and it is just too frustrating for me. And it's like I have so many different things locked inside my brain, right? Like I'm at a point where I can trade effectively without having to learn something new, right? I truly feel like the journaling and the all of that, that's very important when you're trying to solidify your understanding of the concepts. You're trying to solidify or back test a strategy or a thesis you may have. You're trying to vet a thesis you have. You want to have that data to refer to, right? You want to be able to refer to this data so that you can see, okay, this is accurate data about this strategy. I know based off this data, this strategy is an effective strategy. This is how much I can, and some people like to quantify it by percentages. 70% of the time it's going to work, 30% of the time. Some people like to quantify it based off percentages, right? That's not what I do. I don't quantify it based off percentages, right? I just want to see, is it effective, right? I'm looking for signs to let me know that it's working. What are the signs in there when it failed? What are the signs in there when it worked, right? So a lot of times I may take an entry and I'll start seeing signs that, hey, I remember seeing this. This is a time where it failed. You know what I'm saying? So I may cut it short and reevaluate and be like, okay, do I need to go in the other direction? Or I may cut it short and reevaluate and say, do I need to re-enter? Right? Or sometimes I cut it short and don't get a chance to get back in. Right? Or sometimes I'll be like, okay, I'm gonna see how it play out. And you know, it end up playing out, or it end up getting stopped out for a full loss. It's like, but it affords me the chance to manage my position based off of historical data. And you know what I'm saying? I see people be like, you just gotta let it play out. Look here, man. I trade from a discretionary standpoint, right? I'm not a computer, right? I'm not a computer. I'm not doing the exact same thing every single time. So if I see that this trade is not going to play out in my favor, I'm not going to sit there. If I'm sitting here actively managing it, I'm not going to sit there and just take a full stop loss. You know what I'm saying? I'm not going to take a full stop loss. I will cut it if it's showing me signs, signatures that it's getting ready to fail. If it gives me the opportunity to get out in the green, I'll get out in the green, right? And then I'll reevaluate the price action to see if I need to go the other direction or if I just got in early, right? If I just got in early. But if I tip that works for me, if you take your notes and save them in one folder, you can use Control F to search the entire folder. Yeah, I know. I use Control F to look for stuff. I use, but I can't remember what I like save it as. I can't remember what I say. Like I may save it as, you know, whatever, and then I go in and look for whatever, but I might have saved it as, thingamajiggy. And I'm thinking I saved it as whatever, because it's like I did it so long ago, I can't remember what I called it, you know, and I don't have like one specific name for what I'm looking for, you know. So it's like, I don't know. But like I say, journaling is important when you're collecting data. So you want to journal, you want to collect your data, you want to until you get it solidified and you know exactly what you're looking for. But I don't know how I got on all that. I'm rambling. Let's look at price. Let's put it on 15. I'll just do 5-minute charts, get a little bit more detail. All right, look at 5-minute charts. The ES and the NQ they moving very similar. Since I was trading the ES today, let's go ahead and look at the ES. All right. Put it on 5-minute charts. And we're gonna get, all right, this is yesterday's range here. Forget yesterday's range in my, right, boom, that's yesterday's range. Okay, so over here during the Asian, right, this when we opened up in the Asian over here, right, that gray rectangular shape on the screen, that gray rectangular shape on the screen over there, that right there is the new day opening gap, right, where we opened up at 6 p.m. Okay, it's a bearish new day opening gap. So the low of it, right, the low of it is the open for today. The high of it is the close for yesterday. All right, open is the low is the open of the day. The high is the close of yesterday. All right, so we work around it. We trade above it, right? Trade above that liquidity there, right? Trade below it, right? Trade below that liquidity there, right? So now that sets a new liquidity pool. That sets a new liquidity pool after 6 o'clock open, right? Then once we set the low, we go up and we sweep the new liquidity pool and yesterday's high, right? 2 levels of liquidity, of time-based liquidity has been taken out, right? Our new buy side and prior day's high took it out, right? Displaced down, create fair value gap, trade back up into the fair value gap, trade back to the opposite end of our new dealing range, right? And then drop lower, taking out some more time-based liquidity into a bullish order block and last week's high, right? We're above last week's high there, trade back down to last week's high. Okay, consolidate there for a while at last week's high, just consolidating there at last week's high, right? Take out the buy side right there just after 12 o'clock, right? Just after 12 o'clock, we trade up, taking out the buy side, right? We drop down, taking out the sell side, right? So coming into 12 o'clock, right? We create a new liquidity pool, right? We create a new liquidity pool there, right? After 12. So we've set a new range, right? This here, the new liquidity pool low that we set, we've extended the dealing range here, right? The bearish dealing range, we extended it out, right? That's our low, right? That's our sell side low for the bearish dealing range, right? That we were coming down here after sweeping that and turning around. When we talk about the short there going down, we've extended that bearish dealing range, right? And we've created a new dealing range after midnight. All right. So we trade up here, boom, right? Back to the midnight into a SIBI right here in the premium. And then we come down and set relative equal lows, right? We hang out there again. We tap the buy side again, right? Tap the buy side again, making relative equal highs, right? We drop down, still refusing to go lower, right? And then we displace away, taking out the buy side there, right? Taking out the buy side there with a huge displacement. Now we've extended the bullish dealing range, right? We've extended the bullish dealing range, and then we trade back down to a deep discount, taking out this internal liquidity right there, right? Leaving all of this, take out that internal liquidity right there, and then we come back up, ignore the fake news wick, right? And then use the 830 CPI print to blast off, taking out all of the buy side, trading up into consequent encroachment of the daily SIBI. All right. Once we do that, once we blast off and reach the daily SIBI, then price drops back down, right, into the bullish order block, setting the opening range low. This was the low after 9:30, right? Between 9:30 and 10 o'clock. Okay, we trade up. We had an opening range high around here somewhere. I must have deleted it. So it's right here. Where's 9:30 at? Okay, so that's our opening range high, our opening range low, right there between 9:30 and 10 o'clock, right? This is our highest high. That's our lowest low, right? It's inside this dealing range here, right? We trade back above the opening range high, right, into a premium, right? Look like we're consolidating there around that lower quadrant of that SIBI. Let's just eyeball it real quick and see. Yes, right there, right, right there, that lower quadrant there. Consolidating there, that lower quadrant, drop down, displace down, trade back up into 15-minute SIBI, that 1105 SIBI, time-based PD array, right? Time-based bearish PD array there. After that, breaking market structure there, 5-minute breaking market structure. That low came up, took out that high. We displaced down past that low, right? Touch prior day's high, previous day's high, trade back up into the SIBI, drop down, take out the sell side again, trade back up into the opening range buy side. We're below it now. We're using it as resistance. Drop down, take out the sell side, right? Trade back up to previous day's high one more time. I mean, opening range buy side one more time, poking above it, right? Tapping the low of the daily SIBI again, and then we dump all the way back down, boom, below the sell side on the opposite end of this leg here, right? Once we broke below that sell side there, right, we trade back up into this SIBI, right, right there at the low of the opening range, but trade back up into the SIBI, come down again, right, trading back down into the rejection block. Then we come back up, just kind of meandering around, engineering liquidity in this range right there at the last week's high, trading in between midnight and sell side and just hovering around these, this opening price that's midnight, this prior week's high, right, and this prior low right here, just bouncing in between these key algorithmic levels. And that is the intraday price Hexion recap utilizing the ES today. I see something that I missed. I don't know if Steve still in here. It said once you saw it reject from top 15-minute fair value gap, did you change which liquidity you thought it was seeking? I don't know which one you're talking about there, Steve. Steve, if you're still here, give me a time of the fair value gap you're talking about, or click on that Zoom link that's at the top of the chat up there and pull up and ask your question vocally. What's up, Wills J Rock? I ain't seen you in a month of Sundays, man. Where you been hiding at? What's going on, cuz? I see Slater in here. Lump, what mom was talking about?
She ain't really want none. She was just checking in since she was at Auntie house.
Okay. All right. Ain't nobody got nothing? I see Steve ain't respond, so I guess Steve gone. Ain't nobody got nothing for me? Hmm. Go ahead. Uh-oh. Oh, around 12:30, when it rejected, did you change to sell? No, I didn't. I didn't change anything. I wasn't watching the chart no more. Since originally you had a bullish buy. I wasn't watching the chart no more. Once I got out of that trade and posted that in the let me see what time I walked away from the computer. Let me see. Screenshots. It said I posted this at 12:49. So let's just say around 12:40. Let me see. Let me look at this right here. So today. So here, this is when I stopped watching the charts here, right? After this, I wasn't watching no more after this right here, right? So the 15-minute fair value gaps, it didn't get to the 15-minute fair value gaps until over here. So I wasn't even nowhere near the charts. Once it got, this is the 15-minute fair value gap right here. So you said around 12:30. So at 12:30, right here, this is when, right, I got stopped out of the trade right here on this 12:31 candle right there, right? That's when I got stopped out of the trade. And then I think I took the screenshot when price was like over here, right? I took the screenshot when price was over there. And so this is the 15-minute fair value gap right there. And then if I scroll back to your original question, say once you saw it rejected from the top of the 15-minute fair value gap, did you change? So I didn't see when it got here. I wasn't looking at the chart when it got here. But looking at the chart, looking at the chart here, right, when it got there, this right here would be, all right, so just based off of algorithmic signatures, right? So like if like me, if you're bullish, if you was bullish today, right? If you was bullish today, notice I didn't try to buy until we took some liquidity, right? I didn't try to buy anything. I wasn't looking for a reason to buy after taking out this low right there, because this was the deeper liquidity, right? Once we took the liquidity and gave a bullish signature, change in state delivery, right? Bullish fair value gap, look for a reason to buy. Now, once we get up here, right? Once we get up here, okay, we come there to an area where this right here, right, is your initial consolidation, return to consolidation, smart money reversal. And now we get right back there and we set relative equal highs there, right? We set relative equal highs there. Notice this here, very efficiently delivered, left that area. Now it's a balanced price range. Trade back up to that balanced price range, right? Then we drop again. So now that right there, that all of this right here, that's all balanced, right? We come here where our initial consolidation is, right? And we get back to our initial consolidation and we set relative equal highs. And then right here, when you get that break in market structure right there, that is a bearish signature that you can use that right there as a confirmation to want to go back down to the sell side, right? And what sell side are you targeting, right? You're targeting sell side beyond this, because this rate of liquidity took us to here, right? So that right there is not quote unquote sufficient enough after trading back above here and setting these relative equal highs, because the sell program overall is still intact, right? And we've taken out an area of liquidity and we've expanded this dealing range. So now you're looking for liquidity that's resting below here, which is over there, right? So that right there is a signature. If you're bullish like I was, right, I wouldn't have taken this, right? I would have been looking for more confirmation and then took it here, right? Okay, because we get the displacement down, we trade back up here, right? This right here is the low risk short, right? Because we got the smart money reversal. That's the low risk short, right? Being that I'm bullish, I wouldn't have taken anything here. Once we displace away, create the fair value gap, I'm taking it here, because that this low risk short confirmed that that was the smart money reversal. And now that's telling me I'm on the right side of a market maker sell model. So now once I get that extra confirmation, that's just for me because I'm bullish, and now the algorithm has to show me more. Whereas over here, I took this off of this change in the state of delivery because I'm bullish, and we just swept liquidity that I was anticipating. This is an anticipatory reactionary point. We sweep liquidity that I'm anticipating to take us back higher. So as soon as I get this change in the state of delivery, I'm taking this right here because I'm bullish, and it's just swept a level of liquidity that I'm anticipating taking us the other way. Coming up here, right, we did not sweep this liquidity, right? We came and set relative equal highs. So I would demand more of a signature, right? I want to see, okay, is this my smart money reversal? How do I know that? When the algorithm gives me a low risk short right there. Once it gives me the low risk short, okay, now it gave me a low risk short. Now I know that was my smart money reversal because it gave me a low risk short. And then so now I can go in and take that sell right there. Right. So it's not about, you know, what I would have changed. Those are the algorithmic signatures that you want to look for to help get you on the right side of the trade. Right. Those are the signatures you want to look for to get you on the right side of the trade. And like I say, once I came back later, I could clearly see that price was bearish on the day, right? But early in the morning, right, we were, and it's not, I mean, ain't not, like if you were bullish on the day, I wouldn't be mad at you. Why? Because we're in a buy program, right? We're in a buy program, right? And the buy program has been strong. We have not been retracing, right? But what put us into a sell program? We ran into a daily anticipatory reactionary point. Right. That's why the first thing I told the gang when we got on the day, my target has been hit without me. We hit that daily high, that daily target without me. Right. And when we do that, when we get to a daily target, when we get to a weekly target, there's always the possibility of a deeper retracement, either up or down. Right. But since nothing's been able to stop this train, I'm not fighting. I'm not trying to book the trend. Right. I'm not trying to book the trend. But again, you want to trade smart. You want to enter at key levels. You want to enter at key and use algorithmic signatures to help you manage and navigate the thing. You're welcome. You're welcome. Like I say, you always want to understand order flow and price delivery, right? And like I said, since we did not sweep the liquidity there, I would demand more signatures. Show me what you want to do. I love Timothy Rogers' price action. Who is question? I can't remember question mark. I can't remember who that is. I know I remember it, but I ain't seen you in the month of Sundays. Who is question mark? Who is that? Anyway, I appreciate it. I'm glad you get something out of it. I'm glad you get something out of it. What was I doing? That's all I got, man. I appreciate y'all for hanging out with me. I was just updating my chart over here when I looked over and saw that question. Got my high, got my low in there. I think that's all I'm gonna put on there for now for the NQ. Yes, got my high, got my low, got my. Whoa, what's going on here? What's going on here? Oh, I never put it in place. Okay, I'm like, wait a minute, I never put it in place. All right, we got us bearish new day opening gap. I moved it, but I never anchored it. I never anchored it. For those who don't know what a new day opening gap is, new day opening gap is the difference between the close at 5 o'clock p.m. and the open at 6 o'clock p.m. The future starts trading at 6 o'clock p.m. Eastern Standard Time, and it trades until the next day at 5 o'clock p.m. Eastern Standard Time. And there's an hour break, right? When you close at Friday at 5 o'clock, there's no trading on Saturday. There's no trading on Sunday. and it opens back up Sunday night at 6 o'clock for Monday's trade. And the difference between Friday's close at 5 and Sunday's open at 6, that gives you your new week opening gap. But Sunday through Thursday, it gives you your new day opening gap. So the close at 5 and the open at 6 gives you your new day opening gap if there's a difference in price. If there's no difference in price, you just want to remember that close and that open, because the close and the open, they're two of the four pillars: open, high, low, close. Right? That's important in price action. Right? The algorithm refers to these four pillars constantly as price is moving. All right. So what we're at our oh, look at that. We came back down to when we said we want to use this as an inversion fair value gap on the NQ, right? We've come back down to it, right? We went up to the daily, right? The daily SIBI. That was the what's the name? The upside target. Then we pull it back down into the inversion, right? So we created the inversion here, opened up, traded up into that SIBI, then traded back down into the inversion, right? So for the higher time frame bullishness over the long term, we want to see this used as support. Now, we also had something on the weekly that we were watching. Right there, that weekly, right? So we got that weekly BISI down here that we never traded back to, right? We created this weekly BISI, traded into the SIBI, right? Traded into the SIBI, traded down, created the BISI, then we traded up to the high of the SIBI, right? Then the next week, we never traded back down to the BISI. Then we traded up and closed above the upper quadrant of the weekly SIBI. And now here we are in this week, right? And we've traded up into that daily level, right? And now we're pulling back into the inversion fair value gap on the daily time frame right there that we're looking to use as support, right? So we got Monday, Tuesday, Wednesday. Now we're moving into Thursday, right? So for Thursday and Friday, right, looking to see if this week here use this as support and get up and close above that weekly SIBI right there, creating the inversion fair value gap that we want to see, right? And then use it as support for later for all-time highs, right? Does it have to happen right now? No, it don't, right? We're in the second week of June, right? Haven't had a real pullback yet, right? Went up, doji, up, right? Inside bar, up. Now we're up. It's like its price has been on a tear. Right? Since we made this low right here back in the beginning of April, right? The week of April 7th, we blast off, had an inside week, blast off. Not really an inside week because we did trade out, but we didn't do much there. Close to an inside week. It's a doji, blast off, inside week, blast off, and now here we are again, still making a higher high, right? And if we look at it on a candle by candle basis, right? Once we took out this low and had this inside week, right? We made a higher low than that, then a higher high, right? We made a higher low, higher high, right? We had a higher low, higher high. There's a small higher high right there, higher high, higher low and a higher high. Inside week, higher low and a higher high, right? Higher low and a higher high, right? In a sense of just trend line trading or bullish trends, right? You know how people like to see it make a higher high and a higher low to constitute a bullish trend, right? We've been doing that for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, and now we're on the 10th week. Last 10 weeks, right? We've been making higher highs and higher lows on the weekly chart on a candle by candle basis. So we're in a mean uptrend right now. Mean uptrend. All right. And that's why hey, I ain't trying to pick a top. I'm not trying to bucket. Right. I'm not trying to pick a top. I'm not trying to bucket. But when it comes to buying and selling, you want to do it at key time frames. I mean key price levels. I'm sorry. You want to do it at key price levels. You don't want to just buy all willy to the nilly. Right. Put it on 15-minute. This is today. I can hide this. That's from yesterday. We're kind of far away from it. Right. So squanch this up on a 15-minute chart, right? And looking where price is now, right? Where price is right now, right? Looking to the left, right? Right. Look to the left. We're not going to go this far back. This is all the way back to like the 30th, right? Not going to go quite that far back, even though we could if we really wanted to, right? If we really wanted to, we can go all the way back to here, right? Go all the way back to here. Looking at your dealing range there, right? So let's just look at this. Let's go to anchor this out. You just want to do stuff like this right here, right? So we started there after we swept liquidity there, right? And we got all of this, like this straight drop down, right? So we did all this trading back and forth right there. All of that is very, very efficiently delivered, right? All this is very efficient delivered because we came up here and made this high right there. We made a high right there, but you can see we traded back down, right, into a discount. That's very efficiently delivered. So we move up here to that point there, right? We're watching it from when we left this efficiently delivered area, right? And you see we came back down into a discount of that range there, right? We offered sell side, efficient delivery. We offered buy side there, right? So, and then all of this right here is efficiently delivered. We've come back down into the sell side there. I mean, we come back down into the discount there. So as we expand the range up, right, we're still expanding the range up. You see here, we come back down into a discount from this entire move up, even including this little area of consolidation right there, right? So all of that right there is very efficiently delivered. Okay. So now we're looking from here, right? And we go up to there, right? All of this right here, we see here, right? This right here is being treated as a breakaway gap right there, right? So all this right here is being treated as a breakaway gap here. Okay. Just gonna put this out in time, right? All that's being treated as a breakaway gap. All that's efficiently delivered, right? And then we leave that area right there, right? This breakaway gap right here is inside all this efficiently delivered price, right? During that sell side drop. So all this right here, we leave in that area there, balanced price range, right? So we come here, okay? When we left that area there, right? We come up, we set a high there, right? We trading around there. We go up, we set another high, still trading around. We go set another high. Then we drop down into the discount, all the way down into the lower quadrant there. Right. So we've come back down, set into a discount back to the lower quadrant there. Right. So then once we come there, right, we move in that little range there. Right. We drop back down into the discount again. We've come back there. Right. We're still continuing up. Remember, this here is still extending out this price leg. I mean, this dealing range here, we're still extending it to the upside. Okay. Let me copy another thing. Just gonna put this there. Right. So we extend there to there. Right. We take off there. Right. Never come back down to a discount. Go up there, set a new high there. Then we drop back down into a discount of this piece of leg, right? Which extends our price range up to there, right? So then we come here, there, right? And we blast off to here, right? Never come back down, set a new high right there. And then we drop back down. And once we drop back down, we take out that sell side liquidity right there that extends this up to here, right? That extends this up to here. Now, when we pull back here, all the way down to our breakaway gap, right? Remember my breakaway gap, we never came back down to a discount of this portion when we had traded there. Now we come all the way back down to our breakaway gap, right? Which is in the discount of the entire range, right? Our entire dealing range. Come all the way back down to a discount down to our breakaway gap that we left over here. So we've come to a discount PD array, right? Drop down there. Okay. And that right there took us all the way down to there. And now we're inside of a bearish dealing range here, right? We're in a bearish dealing range there, right? But we've retraced back down to a discount there. Okay. So that's a bearish dealing range, right? And then, so inside the bearish dealing range, if you were bearish, you would be looking for a reason to sell in the premium, right? But since we're in a buy program, we're not looking for a reason to sell in the premium. Although, right? Although when you're in this bearish dealing range, right, you have opportunities, right? We trade above here, we trade back down. You got opportunities for scalps inside this area here. We went up above that high, came back down below that low, right? We went up to that quadrant there, came back down below equilibrium of the dealing range, right? Got to the premium, back down to the dealing range, traded back up here, right? You have scalping opportunities in there. Now, coming back over here, right? See, we move back down into a discount of the range, right? Then we're extending up, right? We're extending this overall portion there, right? We're extending this overall portion there. It's right here. Hide that for a second. Here. So we push up there, come back down. We've extended that. Right. Come here, come right back below into a discount, come to equilibrium. Right. Then we come here, we extending this out. I mean, that's our displacement leg there. And we extend that portion there because we're creating a new bullish range. Remember, it's inside of this here. Okay. So once we, right, we'll go up there, right? We never come back down to the discount of this entire piece right here, right? But for the portion right here, where we leave this balanced price range here, right? We come back down into the discount there, just kind of consolidate in there, right? And we're continuing to extend the high, but we're coming down into a discount, and we're also extending that portion. I'm just gonna push this all the way up there because we extended all the way up there, right? Come back down into a discount there, right? Officially delivering that portion there, right? So then we come and we get us a bearish, right? Breaking market structure there, trade back down, right? Trade back down into a discount of this entire dealing range there, right? Trade into a discount of that entire dealing range right here. And then we go and we extend it. We go and we extend that portion of the dealing range up to here. If I can get it, click on there, right? So now we extend that portion of the dealing range up to there, right? So now in this last piece of price there, right? And if we look at our overall range that we've been continuously extending, right? Plop that there. Okay. So this is the overall range. This is the lowest low here. That's the highest high, right? Of the entire dealing range, right? Of the entire dealing range. Every piece of the dealing range, right? Until we get here, right? Every piece of the dealing range until we get here, right? We have come back down to a discount of the range, right? And nope, even there, we came back down to the discount of the range, even here, right? I was wrong, so we did, right? We came back down to the discount of the range, even there. Let me hide this again, messing with my eyes, right? So we did. We came back down to the discount of the range when we got there. Now we've hit, right, this daily there, and we're starting to pull back. Okay, so looking at the range that we're in now, right? That's the lowest low. Right up there. It's the highest high. Lowest low, highest high of the range that we're in right now. Right. This dealing range we're in now. Coming out here. New liquidity pool there. New liquidity pool there. Okay. Right now, we're in a bullish dealing range there. All right. We're in a bullish dealing range there. Here we got relative equal lows there. Right. So that's internal sell side liquidity. Right there. That's internal sell side liquidity. That's in the discount of the range. Right. So you got internal sell side that's in the discount of the range, right? That right there is a acceptable target to sweep liquidity to continue up, right? For a bullish narrative, that's an acceptable target to sweep. Why is that an acceptable target? Not just because it's internal liquidity, right? But because when we extended this dealing range here, right? We came up and we extended the dealing range there by trading above this high, right? When we came down, we set relative equal lows before extending the dealing range, right? So we came and set relative equal lows and then extend the dealing range. So the algorithm has engineered liquidity, right? It's engineered liquidity. What did it do? It came down and swept liquidity there. Well, first of all, it came to this area, right? And it was like resistance, right? Then we broke above it. And so now it's support, right? And so when you trade down and hit this level again, right? You hit it, come back down, hit it. Now we're looking at this right here as a double bottom. Oh, this is strong support, right? So now it's engineered liquidity there, right? And it's gone up to a daily anticipatory reactionary point. Okay, so now that we've gotten to that daily anticipatory reactionary point, right? We have it's showing signs of being on the right side of a market maker sell model, right? We've come up, we got a breaking market structure right here, right? Come up here, trade down below this area right there. This low took out that high right there. Then now we've traded back below that low, right? Trade back down below that low right there. Right now, we treating that as a breakaway gap, right? And we trade it up into the fair value gap there at 2 p.m., right? Treating that as a breakaway gap right there. That breakaway gap is in line with that upper quadrant of the entire dealing range, right? Breakaway gap is in line with the upper quadrant of the entire dealing range, right? This sell side liquidity is in close proximity of equilibrium of the dealing range, right? So, and this sell side liquidity right there, that sell side liquidity right there is also internal liquidity for our entire range. Remember, that was our entire range there, right? This is our entire range. I'm sorry, that's the wrong low, right? So that's our entire range, right? So looking at our entire range, right? This low right there is internal liquidity for our entire range, right? And after we come to this daily PD array, right, we've taken out this major liquidity up here, right? Even if we came back down and took out that low, we're just coming back to equilibrium, right? Coming back to equilibrium, even if we took out that low right there, because that's still internal sell side liquidity for our entire dealing range that we're in, right? But like I say, this uptrend has been very strong. We haven't been getting a lot of retracements, but now that we've reached a daily PD array, that could be cause for a deeper retracement. But at the same time, remember on the weekly, right, we're looking for this right here to become an inversion fair value gap, right? Does it have to happen this week? No, it doesn't. We're just looking for it to become an inversion, right? It would be nice because of the strong way that we pushed up through it last week before last and last week. It would be nice to finish it off and create the inversion. But like I say, we've been going strong for almost 10 weeks. So we don't want to try to force anything. Okay. So we always want to be aware of where we are in price, right? Where we are in price. Right now, on the 15-minute time frame, we are in a short-term sale program right there. We're in a sale program on the 15-minute time frame, right? So we're in a sale program on the 15-minute time frame, and that's the liquidity, that will fulfill this short-term sale program. That liquidity right there, right? Why is that? Because we came up, we took out buy side, we got a bearish breaking market structure here. So now this is the low, right? If we trade back into the range right now, we're using this as a breakaway gap, right? So let's just say we leave that as a breakaway gap and we just stop there. Where's the next liquidity that, because we just took this liquidity, so we're not looking here to complete this sale program. Where's the next level liquidity that will complete this sale program? It's there, right? It's there. There's the liquidity that will complete this short-term sale program on the 15-minute time frame. But Tim, what if we never get down there and complete it? Okay, we just don't, but we want to see a signature, right, of price doing something that's going to invalidate that it wants that. We need price to show us it doesn't want that anymore, right? He needs to show us that it doesn't want that anymore. And keep in mind, there is an imbalance up there. Right now, it's a breakaway gap, but we can trade back up to it, right? Very high resistance. We're in very high resistance right now. And if we look here, we come to this high right here. Well, let's go here. All right, so we trade there. We came here, hit that, drop down, right, and we blast off there. So we come from that high right there, right, and we stretch down, right, to consequent encroachment of roughly consequent encroachment of that right there, right. That puts us right in close proximity of this low right here, right? And then if we go from the highest high of the drop, right, and put us at consequent encroachment of that right there, right, that puts us below that low, right? Well, Tim, what are you doing on that right there? Let me show you. Come here and we put this in quads. Nah, it's equilibrium, supposed to be quads, right? We put that in quads, right? We come here in quads. That's a big, long, ugly wick right there, but we're gonna use it anyway. If we go to the wick that's not too retarded looking, I shouldn't have said that. And we do it like that, right? Around consequent encroachment. Let's get this perfect. All right, like that right there. Right. So outside of this large wick, this is a news wick right here. That's why I'm not using it, because remember that's the 830 wick. So we're not using the news wick. We're using the actual trading wick right here, because this right here traded up right above that area over there, right outside of the news wick. So coming from the high, right, at a quarter, right here at a quarter, we have a fair value gap right there at the quarter, right at the halfway point, right, we have a fair value gap. Okay, halfway, the fair value gap, that's halfway between the high and the low where you anticipate price trading to, is your measuring gap. So if you go from the high down and put the 50% on consequent encroachment of the measuring gap, the low of the Fibonacci tool should be right there around the low that you're anticipating price to trade to, right? That's how the measuring gap work. You're going to have a breakaway gap that's usually at a quarter, right? So we have the high, the quarter, we got equilibrium, lower quarter, and the low, right? Up here at the quarter, there's a breakaway gap. At equilibrium, there's a fair value gap / measuring gap. And then the low, where's the low? Right there, where I said that low will complete this sale program, right? So that's how you anticipate where price can draw to based off of algorithmic principles, right? Algorithmic principles and the way order flow and price delivery works, right? And this teachable moment has been brought to you by Back to Basics, the video series that's coming very, very soon. If you want to learn how to read price action and anything dealing with the stock market, Back to Basics is the video series that you want to partake in. Trust me. It's going to cover everything that I've ever talked about on this YouTube channel. Gang, it's going to be available to you for free. If you have been a part of the gang that's pays through the WAP before May 27, 2025, it's going to be available to you for free. I'm not going to block my blessings. You can go out on WAP and purchase it if you want to, right? But everybody else, you have to pay. I may be dropping a pre-order link in the near future. The pre-order link will depend on how many people pull up on the pre-order link. That may inspire some pop-ups, that may inspire some drip learning, like meaning start, dropping sections of it, depending on how many people pull up on the pre-order link. That's what I'm saying. But like I said, gang, it'll be available to y'all for free. Everybody else, it's going to be affordable. It's going to be at least $50, no more than $100. I'm leaning more toward the 50, but depending on how much work I actually have to put into it, I'm leaning more toward the 50. I want it to be extremely affordable, right? I don't want to tax nobody thousands of dollars when you're trying to figure out a way to be financially free. I don't want to put another shackle of financial burden on you. Appreciate y'all for hanging out with me while I ran my mouth I usually do that, and like just by squeezing up the chart and looking at it, I just squeeze up the chart and I'll look, then I'll mark a high, mark a low, and then I'll mark an internal low like that. I'll just do that. And then everything that I just went through and like that 30 extra minutes, right? That's what I just did when I squeezed up like that, mark that low, mark that high, and mark that internal liquidity. That's what I did by like just squeezing it up. I looked at all of this here. Okay, all that efficient, right? This the last little piece there, right? That's the highest high, that's the lowest low, that's the internal liquidity. We on the sell program there. That low right there completes that sell program. If we lose that low, then I'm looking there, right? If we don't lose that low, then I'm looking there, right? Boom. It takes all of 10 seconds when you just squeeze up the chart and look at, hey, where are we in order flow and price delivery? Boom. But to sit down and explain it, it takes a lot of time. All right. I appreciate y'all, man. Tomorrow is Thursday, so no tape reading. If life don't start lifing, I'll see y'all tomorrow night at 6. I will not be doing a price action recap on Friday. Shout out my homie Torrance Rudd. He's having a album release concert Friday night in Jonesboro, Georgia. Right, he's having an album release concert in John. Oh man, I just saw somebody DM me earlier, and I was supposed to be checking on their WAP stuff. I got to check on that. They said their WAPs, they said their Discord stuff disappeared. I got to check on that. I was out and about today, and it slipped my mind when I was out and about. I had to go by Walmart, and then since I was out at Walmart, I had to go by Sam's. Got me a hot dog, and then yeah. So let's see here. Spelled his name wrong. Spotify. I don't want Spotify. I'm looking for the actual page, man. I was looking for the page. This is the. Oh my God. Oh my God. There it is right there. There it is right there. Yeah. Right here. Harvest Season is the concert. It's in I thought it was in Jonesboro. Is Fayetteville and Jonesboro the same place? I say June 13th, Fayetteville, Georgia. I thought it said Jonesboro. Yeah, right there say Jonesboro. Oh, maybe they moved it. But the little flyer, see the flyer says Jonesboro, Georgia. Maybe they moved it, but this is I'll be here. That's my partner Torrance Rudd right there. And so I'm not doing it on Friday. So you know, if y'all into gospel, R&B slash rap, all that, got Canton Jones there. He's singing rap. Torrance Rudd, he's saying he used to rap back in the day, but he's mostly sing now. I don't know who these other people are. Alonzo Wood and DJ Network don't know who they are. Never met Canton Jones, but I know who he is. He from Deerfield. He from down there where I grew up at. He from Deerfield, but he stay in Atlanta now. And then Rudd, that's my little young partner. But yeah, that's why I'll be Friday night. So I won't be doing a price action recap Friday. So I will try to do one tomorrow night. If life don't start life, and I will see y'all tomorrow at 6. Anyway, till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that they call price action. Yo, it's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. That's just big spot if you don't upload us, man. Yo, man, y'all be safe. I hate these straight streets. Gone.